Hey, what's up, guys? Great to the B to the T to the C to the moon here, and I'm back with another arbitrage video based on the success of the last one. So I shared with you guys an incredible opportunity of arbitrage that was happening on Binance. Some of you guys are still exploiting it, and some of you guys are trading, but I know it's on and off depending on which days you're trading and the timing. But I did see some comments of other people who said, well, I didn't make as much money. Some of them say they lost money. Some of them said, oh, it's not working. So I understand where this problem is coming from. And in this video, I'm about to fix it by explaining to you guys the number one risk when it comes to arbitrage trading and how you can solve it. All right. So in the same video, I also have figured out something really interesting. You know, FTX collapsed, and some people who had money on FTX lost money. Thankfully, you guys, I told you that to take all your money out of the exchanges if you watch my videos. But I figured out a solution now of the centralized exchange problem. So the biggest risk that we have as traders now is that we trust exchanges to trade, and then we put all our money in their hands. And then if they collapse, we lose money. To avoid this problem, I figured out the perfect exchange that I'm using now for trading, and I'll share with you guys at the very end of this video, so stick around. And the second thing that I wanted to share is our daily trading activity of growing a small account of $100 to thousands of dollars. It's on. I keep sharing trades, and I'm giving updates many times in the Discord channel. So if you want to join that program, make sure you watch the video that it's in the link in the description. Join the Discord server as well, but also create a Bybit account to be able to follow the trades that I'm taking if you want to. It's not financial advice, but all the links are in the description below. Now, let's get back to today's subject, arbitrage trading, and where can it go wrong and how do you solve it? A lot of people don't understand that what you're doing mostly is what we call spatial trading or geographical trading, or it can be exchange pair-based trading, right? So we were doing a trade based on exchanges on Binance and other exchanges that had BTC ZAR trading on them, because on Binance the price was a little bit higher. All right. So when you have a situation like that, what happens is that you're basically aiming for the small percentage, but then your enemy of arbitrage is actually timing and volatility. Right? So what happened in that moment was that a lot of people who were doing the arbitrage that I shared on that video on that day or that week, some of them, it didn't work out because of the volatility of Bitcoin on that week. Like Bitcoin literally collapsed from like 20,000s to teens to 10,000s, right? And that was a problem. So most people were just buying over there, selling it to buying from exchange A, selling to Binance, buying from exchange A, selling to Binance, until Bitcoin collapsed and they were wondering why they're not making money anymore. And here's what happened. Imagine you have 100,000 that you're trading with, 100,000, and you're making 5% per trade. But while you bought Bitcoin from exchange A, by the time you sent it over to Binance, let's say that process took you 30 minutes. Within that 30 minutes, Bitcoin dumps by 10%. Guess how much you're going to walk away with when you sell this BTC? 95,000, right? And it's because of the volatility. Bitcoin's value went down. You hedge this risk sometimes by using stable coins, USDT, USDC, but these ones sometimes they also don't have as much liquidity that's needed for arbitrage to be faster. So basically, there are two scenarios and two solutions you can go with if you want to avoid this problem. Number one, if obviously you have to be faster, try to do things as fast as possible, but it still exposes you to the volatility of cryptocurrency. And number two, which is the most important, is actually to hedge your arbitrage. What do I mean by this? It means that when you when you buy BTC, you are in a BTC position, you need another trade or another position that is counter to what you're doing. So the perfect way to say this is if you're trading arbitrage, it's best to have double the amount of money that you're trading, and one of it in the asset that you're trading with already. What do I mean by this? So imagine you're trading with a capital of $100,000, right? BTC is at 20,000, which means that 100,000 gives you 5 BTC, right? And it's better to have another 5 BTC in your account that you can use to hedge the position of the arbitrage trade that you're making, even if it's going to take you 30 minutes to do, or 20 minutes or 10 minutes. So this is what we do. I have 5 BTC on OKX, then I have another 100,000 in cash or USDT on Bybit, right? And now what I would do, because I want to do arbitrage between Bybit and Luno, or it can be any other exchange, then what I would do is I will go ahead and sell the BTC that I have, that I wanted to keep it as BTC, is my BTC investment or my trade. I'll sell the BTC that I have on OKX, and then I'll take the 100K that I have on Bybit to buy the 5 BTC that I need. And now I am exposed to BTC, but not 100%. I'm still exposed by 50% because I have 200,000, 100,000 is in position, right? Now, let's say in between these 30 minutes when I'm making this trade, the price of Bitcoin drops. Well, now I have less money, but I still have 5 BTC, but less in fiat now, right? However, on the other side, on the OKX exchange, I sold my BTC. Now I still have cash that is equal to 100,000. So I still have the two together, but you're now aiming for just the trade to work. So this is the worst case scenario, obviously, that I just explained now, right? In the best case scenario is that, you send over the BTC from Bybit to Binance or Luno, where you're making the arbitrage money. You make the money, and then you withdraw the cash and do it again. But the moment you sell the BTC on the other end of the exchange to make your profit on the arbitrage, you now go back to your OKX account and buy back the 5 BTC that you sold, because you only sold it as a hedge for the other 5 BTC 100K trade you're making, right? So I know it's a weird way to explain it, but this is the type of things that I teach in my courses. If you're not in there, you have to get onto Crypto University. Link is down in the description. Solution number 2. Trading derivatives or futures helps when you're trading arbitrage also, because maybe the first solution may be costly for a lot of people or more complicated. Another easy way is saying, if you're trading 5 Bitcoin, you bought 5 Bitcoin to simply do an arbitrage trade with. At the same time, you can take a short position of BTC at 1x leverage. Don't put any other leverage, just 1x, to make sure that you are hedging against Bitcoin going up and down. So in a worst case scenario is if the price is moving and you cannot really make a profitable trade on the other side, you can either wait it out, or if you can close both positions and you break even, you don't lose any money. Just like the previous example that I gave also, is that you always break even, you don't lose money. You can lose a little bit of money to exchange fees and so on and so forth, but you never really lose the capital itself, right? So again, if the arbitrage didn't work for you, it's because you didn't pay attention to the volatility and the timing. Arbitrage is not just sitting there waiting for you to exploit it, especially if it's on BTC. If it's on USDT, USDC stablecoins, it's cool. You don't have to worry about it, but it's limited level of arbitrage in most markets. So the next video, I will also provide you guys more hints on which platforms and which tools and resources that I use to make my arbitrage trades more profitable. All right. So lastly, I mentioned that I will share with you guys an incredible opportunity that I've discovered for trading without risking all my money on an exchange. And that is with Arbitrage Trading Exchange. I'm using Apex now. It's completely a decentralized trading platform, which means I'm keeping my money in my MetaMask account or in a Ledger Nano hardware wallet, but I can still trade like a normal exchange. It's called a DEX, or a decentralized exchange. So whatever trade you make, your money is still sitting in your own wallet. You don't have to worry about the exchange going burst and all that stuff. You're just trading like you're trading on Uniswap or SushiSwap or on Pancake or any other decentralized exchange, but it looks and feel like any other normal exchange. If you want to use Apex, I've put a link down in the description. If you want to start using a DEX, I will make a tutorial as well today, which will be uploaded in the next coming days, showing you guys how to use it in the exchanges that you use already. it's a perfect tool right now to use to add Apex to it. I'm now obsessed with it. I'm using Apex because, man, it's like I'm trading on Uniswap, low fees, but decentralized, right? So check it out. I will make more videos on it. I know it's very new for a lot of guys. It might confuse you, but great BTC. Gotcha. And thank you guys. I'll see you on the other side. I hope this video you found it helpful, and thanks to everybody who has been subscribing to my channel and liking every video that I post. It goes a long way because the likes helps to grow the YouTube channel. All right. If you have any questions, I'm available on Discord. Link is also in the description. If you want to grab a one-on-one mentorship program with me that's running right now, I'm doing an intake for December and January students. Link is also down in the description. But please, serious people only, because we have to evaluate all profiles before you get accepted. Enjoy your World Cup, guys. I'll see you on the moon. Peace out.